There's a number you've probably never calculated. The amount of money quietly leaving your account every single month, not for anything you need, not for anything that brings you joy, but simply out of habit, out of obligation, out of not wanting to make a fuss. If you added it all up, every subscription you forgot about, every fee you've just accepted as normal, every payment you make because you've always made it, the number might surprise you. It might even unsettle you. And here's the part that matters most. This isn't about being careless with money. It's not about being foolish. Most of the men I've talked to who fell into these patterns are some of the most careful, disciplined people I know. But somewhere along the way, certain spending habits stopped being choices and started being defaults. Stay with me, because by the end of this, you'll know exactly which 9 things are quietly draining your accounts and how to take that money back for the life you actually want to live. I want to start with something a friend of mine said to me a few years back. A man I'll call Dale, 78 years old, retired from a long career as a plant manager, careful with money his whole life, the kind of man who balanced his checkbook by hand well into his 70s, long after everyone else had switched to apps and online banking. Dale sat me down one afternoon and said, "I think I've been bleeding money for 15 years and I never noticed." I asked him what he meant. He told me he'd finally sat down, really sat down, with a notepad and a calculator, not just a glance at his statement, and gone through every single recurring charge on his account, every subscription, every fee, every payment that left his account automatically month after month without him giving it a second thought. What he found shocked him. Not because any single item was large, but because the accumulation, the slow, steady drip of small expenses he'd stopped noticing years ago, added up to an amount that over time could have funded a trip he'd always wanted to take, or padded his savings in a way that would have given him real peace of mind. None of it was one big mistake, he told me. It was 100 small ones repeated for years. That conversation stayed with me. And it's the reason I want to talk today about 9 things that many men our age are quietly spending money on. Money that, with a little attention and a little courage to make some changes, could be redirected towards something that actually matters to you. Before we go further, I want to be clear about something. This is not financial advice. I am not a financial advisor, and nothing in this video should be taken as a specific recommendation for your particular situation. These are general patterns and reflections, things I've observed in my own life and in conversations with other men my age. For decisions about your money, please talk to a financial professional who knows your full picture. The stories I share are composite illustrations, drawn from common experiences, not about any one real person. Now, let's talk about where the money goes. Number 1. Extended warranties on items that don't need them. You've stood at the checkout counter. The cashier asks if you'd like to add the extended warranty, 2 more years of protection, just a small additional cost. And something in you says yes, because what if something breaks? What if you need it and don't have it? Here's what consumer research has shown. Consistently for years, extended warranties are, broadly speaking, one of the most profitable products retailers sell, precisely because most of them are never used. The item either breaks within the manufacturer's original warranty period, or it doesn't break at all during the extended period, or the cost of the repair ends up being less than the cost of the warranty itself. A man I'll call Norman told me he calculated over a single year that he had purchased extended warranties on a toaster, a blender, a set of headphones, and a lawn trimmer. Total cost, a meaningful sum. Total claims made, 0. I was paying insurance on things that cost less to replace than the warranty itself, he said. I just never did the math. This doesn't mean every warranty is worthless. For genuinely expensive items, certain large appliances for instance, it can sometimes make sense. But for most everyday purchases, you are often better off simply setting aside a small amount each month in your own account as a personal buffer, rather than paying a company to hold that risk for you. Before you say yes at the counter next time, pause. Ask yourself what the item actually costs to replace. Often the answer makes the decision easy. Number 2. Life insurance policies that no longer serve their original purpose. This one requires some care, because life insurance is genuinely important for many people, and I am not suggesting you cancel a policy without real thought and professional guidance. But here is a pattern that financial planners have observed for years. Many people purchase life insurance policies decades earlier, when they had young children, a mortgage, financial dependence, and continue paying premiums on those same policies long after the original need has changed. A man I'll call Stanley had purchased a policy in his 30s to protect his young family in case something happened to him. Decades later, his children were grown, financially independent, his mortgage was paid off, and his other assets had grown to a point where the original purpose of that policy no longer applied the same way, but he kept paying the premium every month for years simply because it had become a habit, a line item he'd stopped questioning. When he finally sat down with a financial advisor in his 70s, the advisor asked him a simple question: "What is this policy actually protecting now?" Stanley didn't have a clear answer. This is exactly the kind of conversation worth having, not on your own but with a qualified financial professional who can look at your complete picture. Some policies still serve a real purpose at this stage of life: funeral expenses, estate planning, leaving something specific behind. Others may have simply outlived the reason you bought them. The point is not to cancel anything impulsively. The point is to ask the question, to actually sit down, the way Stanley finally did, and find out whether what you're paying for still matches what you need. Number 3. Subscriptions you forgot you had. This one is almost universal, and it has gotten worse, not better, as more of life has moved online. Streaming services, magazine subscriptions, apps with monthly fees, membership clubs, trial periods that quietly converted into paid plans because nobody canceled in time. The Federal Trade Commission has documented this pattern extensively, what's sometimes called the subscription trap. Services designed to be easy to sign up for and deliberately difficult to cancel, counting on the fact that most people simply won't go through the trouble of stopping them. A man I'll call Vincent discovered he was paying for 4 different streaming services he hadn't watched in over a year, a meal kit subscription he'd tried once and never used again, a digital magazine he'd forgotten he subscribed to during a free trial 3 years earlier. "I went through my statement line by line," he told me, "and I genuinely didn't recognize half of what I was paying for." Here is a simple exercise worth doing once a year, if not more often. Pull up your bank or credit card statement, go through every single recurring charge line by line. For each one, ask yourself honestly, have I used this in the last month? Will the first use it in the next month? If the answer is no to both, cancel it. You can always sign back up later if you genuinely want it back. This single habit, repeated once or twice a year, can recover a meaningful amount of money that's currently leaving your account for nothing. Number 4. Timeshares you no longer use, or never really did. I want to handle this one with real care, because I know how many people my age own a timeshare, and I know how complicated and emotionally loaded the topic can be. Timeshares were sold, for decades, as a smart way to guarantee vacation time in a beautiful place for years to come, and for some people, in some circumstances, they did provide real enjoyment. But consumer protection organizations have documented consistently that timeshares are notoriously difficult to resell, often carry rising annual maintenance fees regardless of use, and frequently end up costing owners far more over time than the vacations they provide are worth. A man I'll call Roger had owned a timeshare for over 20 years. In the last 8 of those years, he and his wife had used it exactly twice. The rest of the time they paid the annual maintenance fee anyway, a fee that had increased substantially over 2 decades, simply because the unit sat there, technically theirs, technically available, technically a vacation waiting to happen. "We kept telling ourselves we'd use it more," Roger said, "year after year, and the fee kept coming whether we did or not." If you own a timeshare you're no longer using, it is worth investigating your options, through the timeshare company directly, or through a qualified, reputable resource. I want to add an important caution here. The timeshare exit industry itself has unfortunately attracted scammers who charge large upfront fees and deliver nothing. Be very careful, do your research, and never pay a large fee upfront to someone promising to get you out of a timeshare quickly. The broader lesson here is simpler. If something you're paying for every year isn't bringing you the value it once did, it's worth asking honestly whether it's time to let it go, carefully, and through legitimate channels. Number 5. Brand names when the generic does the same job. This one feels almost too simple to mention, but the habit runs deep, and the cost adds up more than people realize. For decades, certain brand names became trusted defaults. You bought the name you knew, the name your parents bought, the name that felt reliable. And for some products, there are genuine differences that matter to you, and that's a completely reasonable thing to pay for. But for a wide range of everyday items, over-the-counter medications, basic pantry staples, household cleaning products, the generic or store-brand version is often manufactured to the same standards, sometimes in the very same facilities, as the brand name sitting next to it on the shelf. A man I'll call Albert told me he switched, over the course of a single year, from brand name versions to generic equivalents for about a dozen household items he bought regularly. He kept a simple log. By the end of the year, the difference was substantial enough that it covered several months of a bill he'd been worried about. I didn't taste a difference. I didn't feel a difference, he said. I just kept more of my money. This doesn't mean every brand name product needs to go. If there's a specific item where you genuinely notice and value a difference, that's worth paying for. But for the items where you've simply never questioned the habit, where brand loyalty has become automatic rather than deliberate, it's worth trying the generic version once and seeing if you notice anything at all. Often you won't. Number 6. Gym memberships you rarely use. I want to be careful here too, because staying active matters enormously at this stage of life. I'm not suggesting anyone stop exercising, quite the opposite. What I'm pointing at is something different, the gap between what people pay for and what they actually use. Fitness industry research has shown, consistently, that a significant portion of gym memberships go largely unused, paid for monthly, attended rarely, kept active more out of guilt or good intentions than actual habit. A man I'll call Curtis had a gym membership for 3 years that he used, by his own honest count, perhaps a dozen times total. He kept paying because canceling felt like admitting defeat, like giving up on a goal he still believed in, even though the evidence said otherwise. I finally canceled, he told me, and started walking in my own neighborhood every morning instead. Costs me nothing. And honestly, I do it more consistently than I ever went to that gym. This isn't an argument against gyms. For many people, a gym is exactly the right environment, and the membership is well worth the cost. But it's worth being honest with yourself about your actual pattern. If you're paying every month and rarely going, that money might serve you better redirected toward an activity you'll actually do consistently: walking, a community class, equipment for home use, or simply a membership at a smaller, less expensive facility that better matches your real habits. The goal is staying active. The method should match how you actually live, not how you wish you lived. Number 7. Lottery tickets and sweepstakes entries. This one is delicate, and I want to approach it gently. A ticket here and there, as a small occasional bit of fun, is something many people enjoy without it affecting their finances in any meaningful way. I'm not here to lecture anyone about an occasional indulgence, but behavioral economics research has shown, consistently, that lottery and sweepstakes spending tends to be regressive, meaning it takes up a larger proportion of income for people on fixed or limited incomes than for others. And for some people, what starts as occasional fun can quietly become a habit that costs more than they realize. A man I'll call Harold told me he used to stop at the same gas station every week and buy a stack of scratch-off tickets, not in one large purchase, but in small, repeated $5 and $10 amounts that never felt significant in the moment. It wasn't until his daughter, helping him organize his finances one year, added up his receipts that he saw the total. It was, in his words, enough to make me genuinely uncomfortable. I never thought of it as a real expense, Harold said. It was just a habit, a little excitement on the way home. But it added up to something I never would have approved of if someone had asked me up front. If lottery tickets or sweepstakes entries are a small occasional pleasure for you and the amount genuinely doesn't concern you, there's no need to feel guilty about that. But if you've never actually added up what you spend on this over a year, it might be worth doing, honestly, without judgment, just to know the real number. Sometimes the number itself is all the information you need to make a different choice. Number 8. Avoidable bank fees and late payment charges. This is one of the most preventable expenses on this entire list, and yet it remains one of the most common. Overdraft fees, late payment fees on credit cards, minimum balance fees, ATM fees from using machines outside your network. The Consumer Financial Protection Bureau has documented extensively that these fees represent a significant and largely avoidable cost for many account holders, often triggered not by financial hardship, but simply by timing. A bill set to auto-pay a day before a paycheck arrives, a forgotten due date, an ATM used out of convenience rather than necessity. A man I'll call Edwin discovered, when he finally reviewed a full year of statements, that he had paid several $100s in overdraft and late fees combined, not because he didn't have the money, but because the timing of his payments and deposits didn't line up the way he assumed they did. It wasn't a money problem, he told me. It was a timing problem. And once I actually looked at the calendar and adjusted a few due dates, the fees just stopped. Many banks now offer free alerts when your balance drops below a certain threshold. Many also offer the option to link a savings account as overdraft protection, which can eliminate these fees entirely, and simply adjusting due dates on recurring bills to align better with when your income actually arrives can solve this for good. This is one of those categories where a single afternoon of organization can pay for itself many times over, every single year, going forward. Number 9. Unsolicited home repair and service offers. This one matters enough that I want to spend real time on it, because it specifically and disproportionately targets people our age. Someone arrives at your door, or calls, they tell you they noticed an issue with your roof, your driveway, your gutters, your furnace. They happen to be in the neighborhood. They can give you a special price today only, if you act now. The Federal Trade Commission and AARP's fraud research have both documented extensively that home repair scams disproportionately target older homeowners. The pattern is consistent: urgency, a problem you can't easily verify yourself, a price that sounds reasonable in the moment, and pressure to decide immediately rather than getting a second opinion. A man I'll call Bernard paid for a roof repair from a contractor who showed up unannounced, pointed out damage that Bernard couldn't see clearly from the ground, and offered a same-day discount if he signed right away. Bernard paid a substantial amount. When a licensed contractor he later hired for an unrelated project took a look, there was no evidence the original repair had been necessary at all, or, in some cases, that it had been done properly. "I just didn't want to deal with a roof problem," Bernard said, and he made it sound urgent. "I never thought to get a second opinion. I just wanted it handled." Here is the simplest protection against this entire category. Never agree to a same-day repair from someone who appeared unannounced. Legitimate contractors expect you to get a second opinion. They expect you to check their license. They expect you to take time to decide. If someone is pressuring you to act today, that pressure is the warning sign, not the deal. Take their information. Tell them you'll think about it, and then call a licensed, reviewed, established company on your own terms to get a second assessment. This single habit, refusing to be rushed, protects more of your money than almost anything else on this list. So there they are. 9 things quietly pulling money out of your accounts year after year, often without you fully noticing. Extended warranties on items that don't need them. Life insurance policies that have outlived their original purpose. Forgotten subscriptions. Timeshares you no longer use. Brand names when the generic works just as well. Gym memberships gathering dust. Lottery tickets that add up more than you realize. avoidable bank fees, and unsolicited home repair offers designed to rush you into a decision. None of these on their own will make or break your financial future. But together, added up, year after year, they represent real money. Money that could be funding the things that actually matter to you. A trip you've been putting off, a gift for a grandchild, a more comfortable cushion of savings, simple peace of mind. I want to end with something important. This is not about becoming a man who counts every penny and squeezes the joy out of his life. That is not what I'm suggesting, and I don't think it would serve you well even if you tried. This is about something different, about being deliberate, about making sure that the money leaving your account every month is leaving because you chose for it to, not because a habit formed years ago and you never stopped to question it. Take an afternoon, sit down with a statement from the last few months, go through it line by line the way Dale did, the way Vincent did, the way Edwin did. Ask yourself, honestly, for each item, do I want this? Do I use this? Does this still serve the life I'm actually living? For the things that pass that test, keep them and enjoy them fully. For the things that don't, let them go, without guilt, without drama. That money is yours. You earned it across a lifetime of work. It deserves to be spent or saved with intention, not by accident, not out of habit, not because nobody ever asked the question, by choice. If something on this list hit close to home, if you found yourself nodding along to one of these, or if you've already gone through this exercise yourself and found something surprising, I'd love to hear about it in the comments. Your experience might be exactly what helps someone else take that first look at their own statement. Take care of yourself. I'll see you in the next one.